of crypto. Because remember, the mortgage crisis started with subprime. And when the Fed was out there saying, oh, don't worry, it's contained to subprime, I was saying, no, subprime is the tip of the iceberg. We're just seeing it in subprime first. That's the weakest link in the chain. But we're going to see it in the rest of the mortgage market. So we're seeing the credit problems first in crypto because that's the weakest link. But you're going to see broader problems throughout the economy because we've had 0% interest rates for more than a decade. You can't build up that kind of drug addiction and then all of a sudden rates are 5% and there's not massive withdrawal. So let's say we have another financial crisis, we're in a deep recession, but inflation hasn't come anywhere near 2%. I mean, maybe it's not 8%, maybe it's 4 or 5%, right? That's still well north of the Fed's so-called target. So what happens if in an environment where inflation is already double or triple the Fed's target, but then the Fed gives up the inflation fight and says, no, we got to stimulate the economy, and they stimulate the economy by creating even more inflation. Well, now they're throwing gasoline on a fire. And so now a high inflation rate gets even higher. And in that environment, I don't see financial assets as a group doing well. So I think bonds get killed. Instead of going up with QE, they actually go down. Long-term interest rates go up, which is going to be a huge problem. High multiple companies that lose money, these prices continue to fall. The stocks that go up are, again, the real businesses. That's why the Dow Jones was the strongest of the major indexes last year, because it has the most value, even though, on a relative basis, there's not a lot of value there. I mean, in an absolute basis, but relative to the S&P or the NASDAQ, there's better value in the Dow. Now, there's even more value, outside the United States. I mean, that's why, for example, our investment strategies, our two main strategies, dividend and value, both had positive returns in 2022. And, they weren't huge returns, but we were in the black, and that's huge when everybody else is down 20, 30, 40%. To be up a couple of percent is a big achievement. And what made it even more difficult was that the US dollar was still up about 10%, and all of our stocks are foreign. So they had to go up 10% just to break even. And so our stocks did better than that. But I think 2023 is going to be an even better year for my investment strategy. I mean, I think it just could be phenomenal if we hit it on all cylinders, which I think we will, which will be a falling dollar, which is a big tailwind. But then we continue to see the rotation from momentum to value, and we're just loaded up with value and dividend payers. And I think the next rotation, which has just started and people aren't really paying attention yet, is from developed markets to emerging markets. And so, we've got good positions there. So I think we're set to where the money's going to be. I've been set for a while now. I've been anticipating this rotation for a long time. So it's long overdue, but I'm here and I am welcoming what's going to happen, I think, in this year from an investor's perspective. I think from an American perspective, I'm not welcoming anything because I don't think any of this is a positive for the U.S. economy or for most Americans. I just think it's positive for my clients, and me in particular. I'm my biggest client. So I think I have more to gain than anybody from this strategy playing out.
Interesting. So one thing you said that piqued my interest there was, so you're saying that Treasury bonds will get killed, but did you mean Treasury bonds? You think even the long-term Treasury bill, if they go back to QE, it'll still get killed even though the Fed's buying it because inflation?
Yeah, well, because the only way the Fed can buy... You don't think they'll do
yield curve control and keep it pegged to a certain yield or something like that?
Well, if they try to do that, the more they try to keep yields from rising, the more money they have to print to buy those bonds, which means the more inflation they create, which means the less attractive the bonds they're buying actually are. So the more bonds they buy, the more bonds they have to buy. And so they can't solve this problem. But if they really can succeed in keeping, let's say, long-term interest rates below 4%, which is where they are now. They're, in the mid threes, right? If they do succeed in doing that, it's going to be because the Federal Reserve buys them all. But then whatever bonds the Fed is not buying are going to be, collapsing in price and soaring in yield. So they may be able to keep the Treasury yields below 4%, but they're not going to keep municipal bonds below 4%. They're not going to keep corporate bonds unless they start buying those things too, and mortgages and all that. But the more they buy, the more they have to buy because the more everybody else wants out. And if the Fed is there with a big bid in the market and the Fed says, we will overpay for your bonds, sell us all your crap and we'll overpay for it, well, everybody is going to hit that bid. But that just makes the inflation problem much, much worse. So, the Fed has put us into a box and there is no way out. And I've been warning about this for more than a decade. I knew exactly where we would end up. I just didn't know how long it would take to get there or maybe the exact route we would take. But I knew where we would ultimately end up. And that is exactly where we are.
And so from a philosophical perspective, with the Federal Reserve, because also what you mentioned about how they might buy corporate bonds, they did a little bit of that. They bought some like corporate bond ETFs and during the COVID crisis. If it gets to that level and every crisis we're just papering over more and more with the Federal Reserve, from your philosophical perspective, because I know you're an Austrian, what is your solution to that? Do you think we should have never had QE? Should we just not have a Federal Reserve to begin with? What's the Peter Schiff solution to this?
Yes, we would be better off had we never created the Federal Reserve in 1913. But, it's possible that we could have created something even worse. So there's no way to know for sure. Maybe if we had a bunch of parallel universes that we could take a peek and see how they all worked out. But the way they originally envisioned the Federal Reserve wasn't that bad. The problem is they changed it, and because the original Federal Reserve Act, the Federal Reserve wasn't even allowed to buy U.S. Treasuries. It was prohibited by law from even owning them. And of course, the original Federal Reserve notes were backed by gold, 40% gold, 100% commercial paper. And the mission of the Federal Reserve was to have an elastic money supply. And what that meant was when the economy expanded, they would expand the money supply along with the economy. But then when the economy contracted, they were supposed to contract the money supply. But we don't do that. We do the opposite of that. What the Fed does now is when the economy is strong, they expand the money supply. And then when it's weak, they expand it faster. Right. So it's not elastic.
When that switch occurred, when did we start doing the exact opposite of the initial,
I don't know exactly, but certainly probably during the Depression, everything started, with Roosevelt in the 30s and then really kicked into gear in the 60s with the Great Society programs and the War on Poverty and the Vietnam War. And, that's why we had the big outburst of, price inflation, in the 1970s. And it's going to be worse now. In fact, I think the last year or two was already worse than the worst of the 1970s, because when they go back and say, hey, inflation was 10, 11, 12% in the 70s, and it's only 7, 8% now, that's apples to oranges because the CPIs are different. If you took the 1970 CPI and you used it to calculate the CPI today, you had the same metrics, we would have had 15 to 20% inflation last couple of years, much higher. Or if you took our CPI and brought it back and redid the 70s numbers using the CPI of today, they would have had inflation maybe no higher than 6, 7%, something like that. So we're already worse, but we're just getting started. And you remember, the way they were able to bring that inflation to an end